What's the difference between a fixed and a variable mortgage?
Oh, great question. And your question is especially relevant. We've seen a lot of changes in mortgage rates here in the past few months. So I guess firstly I'll speak to a variable mortgage. So with a variable mortgage, you often still commit to a term. However, you're not locking in the rate. So say we'll use a 5-year term, for example. That's probably the most common mortgage term. So we'll use the 5-year term for our example today. So with a variable rate mortgage, you still commit to a 5-year term, and your rate is determined based on prime. So for example, your rate would be prime minus something, right? Prime minus a half, say. And then the prime rate is, as for those who don't know, prime rate is a rate that's set by the bank, and all the banks have their prime rates and they're all comparable, and your mortgage rate would float with prime. So if prime goes up, your mortgage rate, the rate that you're paying on your mortgage would increase. Prime goes down, your mortgage rate, the rate that you're paying on your mortgage could decrease. And that doesn't mean your payment changes every month as prime changes, but what does change is how much of your payment goes to principal versus interest. And then at the end of your 5-year term, then that resets, right? And if the rate has increased a lot, your monthly payment that you pay may change significantly at the end of the term. Where a fixed rate, you're committing and you're locking in, you're committing to a term and you're locking in a rate for that term. So in the same example of a 5-year term, with a 5-year fixed rate mortgage, you know exactly what your mortgage rate will be for the next 5 years. And you know exactly what your payments will be for the next 5 years and how much of each one of those payments will go to principal and how much will go to interest. And that's locked in. And then at the end of that term, again, you would renegotiate a rate. And that's the difference between fixed and variable. As you can understand, fixed rate gives you a little more security. You know exactly what your rate will be. But typically, we see fixed rates are a little bit higher than what a variable is because there's a little more risk in a variable rate.